Hey guys, can you hear me?
Hey Rob, yes, we can. I can.
All right, cool. How are you guys? How are you doing?
Pretty good, pretty good. Curious about the indicator you're creating.
Yeah, so we're in the testing phases right now. The idea behind it is to help us find bottoms like this. So this is here, let's just enlarge this a bit. Basically, we're trying to figure out how to give people more confluence. What I'm trying to avoid though is people using the indicator only. So like here's a prime example. So this tapped into a demand zone, and we show a divergence here. What that means is we're measuring the RSI, so the BFIs stop pushing down really hard. So that paired with a chalk, that kind of gives us extra confluence to trade away from the sweep. And then right now, and this test here is a test of the moving average we have set. That can again be extra confluence to trade away from the sweep. I'm still playing with all the numbers. This isn't the final version. This is kind of the testing versions. So nobody's gonna have it till I got all the numbers figured out and what's the highest probability. But the idea is to basically give you guys extra confluence for finding bottoms and top. But there's some discrepancies with it too. It can't be your only confluence because you'll get wiped if that happens, right? But just to show you here, so this is a GU trade we had today. I just got this from the developer yesterday, so this is literally in the beginning testing phases. But right here again, we showed a divergence. We're properly priced. We got a chalk and a flip. And right here, we got a test of our moving average. So between this green line and our blue dot, we got 2 extra confluences to take along here. I ended up breaking even on this one. I wasn't patient enough to wait for this, but it took about an hour to come back. So once it tapped it, I waited for the next flip zone. But again, the idea is just to give people more confluence for entries. I think when I fine tune all the numbers and find that sweet spot, I think it'll definitely be a great help. Right now, there's a big gap I'm trying to close up. I'm trying to make it so it's not too sensitive and not too extreme and find that happy median. Because like a lot of the indicator is adjustable. And I'm going to leave it that way because there's going to be people that'll have 5-minute entries, 15-minute entries, 30-second entries. So you definitely want some adjustability. I'm just trying to find a good default setting for members to start with. But yeah, like I said, I just started testing yesterday. As soon as this thing's up and running, and I think it's going to help us a lot, it'll get released to the neighbor or the members, not the neighbors. There's a couple things about it too. The other side of the indicator is it can start telling us when the volume's dying out. So for example, we were in a short from here, we get down here, we're getting volume dying out. It's showing that the BFI is not pushing hard. So if you are in a short from here for some reason, with the volume going down, this is probably a good place to be looking at some heavy partials, right? When I got all these numbers dialed in, I'll be making a video for all you guys of how to use it. But like I said, it's this is the last thing that should come into your trade idea. Is there a chalk flip? Is the market structure on my side? Is pricing on my side? Okay, cool. And then the indicator says, yeah, cool. That's just extra confluence. But if you guys just sit there and take every indicator signal, it'll definitely burn you. So there's going to be that fine line where this can be a great help, but it can also completely wreck guys if you take every single buy and sell signal the indicator gives you. Which is why I'm kind of glad everybody went through the course and everybody basically got trained up properly before they're going to have any indicator access. Like myself, I'm very anti-indicator. I just found a way of possibly using a moving average and RSI divergence to find tops and bottoms a lot easier and maybe avoid a few of those fake chalks where we take hits that are unnecessary. But that's the basic idea behind it. Like I said, it's the testing progress is going good so far, but it'll likely be a few more days till I get the numbers dialed in. And once they're dialed in and I make those the default settings, then the members will have access and then I'll make a training video on it. But right now, to give it to guys, I think it'll do more harm than good because it's just not there yet. Like the indicator is ready, but the numbers and the settings aren't. I haven't found the sweet spot between the MAs, the momentum, the divergence. There's a lot of adjustability, and I'm just gonna try to get rid of that confusion so that nobody else has to sit there and figure this out and take a bunch of unnecessary losses, if that makes sense.
Yeah, it looks promising. We will
Yeah.
have patience and we will wait for the final review.
Yeah, like the majority of the coding's done. So if we do change something in the coding, it shouldn't be anything major. Like I said, it's just a matter of me going through everything and making sure it's the perfect settings for all the members. So how did you guys' trading go? Does anybody have any questions? Does anybody want to share any charts or ask questions? Because this is your guys' time. Ask away.
Question, bro.
Yeah, what's up, bro?
Yeah, fine. Can you please open the second chart, GU?
Yeah.
Here
You
already-
want just the right chart?
The right chart, yeah, the right side.
Okay, yeah.
Okay. Can I annotate?
Yeah, annotate all you want, man. Draw all over it.
Okay, kindly a little bit zoom in so
Zoom
that I
in,
can
yeah.
easily find the.
Is there a particular area you want me to zoom in on?
Okay, yeah, that's good. That's good.
Down here?
Okay, fine. That's perfect.
Okay.
Okay, my question is, this is a supply area, yeah. So
100. Yeah.
point I should do take it the first one reaction, because in the supply zone here one reaction, here another reaction, and final breaking up this here another reaction. And this is my first question, and the second is also relevant this the first question. Then if this is my first reaction, I can take, so my supply, where I draw my supply, is this area is valid, because there are also a valid supply, the last price to move this break this supply area.
Right. I think I understand what you're asking. So, my favorite places to take trades from are the areas that take out the reaction point, which is this. With that being said, there's nothing to stop GU from tapping into this wick and then going. But 3 out of 5 times, this will be the spot that goes. If you still believe in your move being true, what I'll do a lot of times is put an order on both. Like this morning, I put an order on this, and then I put an order on this. This came up here. I didn't like how it was moving, so I went break even, and then I took this order off. It did end up coming back, but something I was looking at even when I had this order on is we had these equal lows. So I was kind of wondering if GU was going to push deeper and maybe wipe them and then go. I ended up closing this trade early. I think it was like 5.9 R or something. My initial target for GU was to run this high. However, yesterday I broke even on a trade that was 4R, and then I broke even on another trade that was 5R. So I let 9R slip away yesterday. Instead, I took 2 hits and paid all the commissions. So today I was just kind of looking at being really safe and not being silly. So I profited the first supply. But to answer your question, this is a valid zone, and so is this wick. And
the first reaction point we should take. because there are so many reaction point in this supply. So which one is the fast reaction, or the upper or the lower reaction?
So usually I go with the latest reaction, which would be this. However, the other way of looking at it here, hold on. I'm just gonna, let's see if the 30 seconds a little cleaner. So the other way of looking at it is if this is the reaction point and that was our initial reaction point, what took out that reaction point? And you can see the move initiated from here. Now, if you want to really get into the finer details, if this candle right here was a little bit lower and it was the cause for taking this out, then my order would have only been on here. However, the move that broke that reaction point and took it out initiated from this inside bar. So more often than not, this inside bar is going to be a good place to look for an order. I don't know if you're using the inside bar indicator, but I found it's not like the most amazing thing with EU, but with GU, I found it really likes the inside bar. But anytime there's an inside bar, a lot of times I'll go down to the 30 second and investigate. I don't use 15 second very often. I find it's a little noisy. But even if you don't have seconds though, and if you're not sure, if you see the inside bar and then you have these sell to buy wicks up above, even look at how this move formed. So you can see this candle went up here and it took out that reaction point. Where did that move initiate from? So even on the 1 minute, you could tell that it came from the inside bar. Now, if we had a different scenario where there was another candle up here, let's say that was an inside bar and it initiated the takeout of this reaction point, I would be looking in that area. I'm always curious to what took out the reaction point. If there is multiple reaction points and you have like 3 to pick from, because say this is your supply and price did something like this where it kept going in, I'm going to go with the latest reaction point. I'm going to disregard the last 2 and I'm going to go with the latest one. For the most part, it works. Again, it's not perfect. It's trading. Nothing is, unfortunately. But always try and find the originating move of what took out the reaction point. And if you're not already using it, check out this indicator, IBSV2. It's kind of the better one that I found, but it can be quite handy. Even if you don't have seconds, it lets you know that there's something there on the lower time frame, and it lets us know there's a range there. And a range a lot of times is BFI stacking orders, so it can be a good could be like an extra confluence for a POI almost.
Yeah, bro, makes sense. Thanks.
You bet. Does anybody else have any questions, or even charts you guys want to share?
Hey, Rob, Greg and I are basically from the same country. He's from Belgium, I'm from Holland. But
Okay.
can you give us a remap from the daily 4 hour into the 15 minutes and then went to the 1 minute, please?
Okay, yeah, we could do that. Yeah, so we'll just go to this one for now. So the way I read it, this, I'll actually even go on the weekly. The way I start looking, and no, you don't need the weekly. I just quickly look. I always try to find POIs that created new structures of some sort. So right here, we had a weekly high that was taken out, and this POI did it. So anytime I have like a weekly or daily, I expect a really good reaction. The next thing, I'll go down to the daily, and on the daily, what I'll notice is we've been very aggressive down, and then our aggression's kind of slowing down. But then what I'll start looking at is all of this is trend line liquidity, and I'll start asking myself, why is it stacked there? GU hasn't done it yet. Let's actually I'm just going to get rid of these. GU hasn't done it yet, but on EU, we were I was discussing it with a couple of people, but on EU here, for example, just go to the 4-hour. Look at the pace of EU. Aggressive
Divergence.
down, very slow, aggressive down, kind of up, and then look how slow we're going down. We've kind of been stuck in this range. So if you guys refer back to the range wipe part of the course that I was talking about, this is exactly it. And if you look at all of this, this was all a target. To me, that's what I look at on the higher time frame. Yeah, EU put in a new low, so we're unconfirmed bearish. The bigger picture is weekly and daily are bearish, right? So if I had to start creating a scenario in my head, the first thing I'm going to think is, where is the highest POI in this whole range that's unmitigated? Right there. Where's all the liquidity line? Right there. And I was actually counting on NFP to wipe the range and then go down, but it never did it. If you go back and backtest any pair on pretty much in the last couple months, there will be likely a couple of these big ranges per month. And what you're going to notice is they always just sit there and then they go and then they wipe the liquidity and then they go whatever way they're going. This same scenario right here, it repeats over and over and over. Even if it did something like this, where's all the liquidity stacked? And no, I'm not, like right now, if I had to guesstimate, I would say EU is likely to continue down, but there's nothing to stop EU from going up. And the reason being is, again, what we tapped into. We again have a strong weekly zone. There's another strong weekly zone. You took out a weekly high and created a new weekly high. So anytime you're looking at a demand or a supply, look at what they did. If it's just a demand and price sort of did this and kind of did nothing, that's not that strong of a demand. If it's a demand that pushed price higher and took out a high, that's a strong demand. So like anytime I break down a chart, I start looking at what that supply or demand did. If it did next to nothing, it's likely going to be used to create inducement for a more precise POI. So like, I guess to answer your question, I don't even so much sit on the daily very much. The only thing I use daily for is to know when the 4-hour trend's likely to end. So when we were coming up here on the daily, and this was the daily high, I expected Euro to turn bearish again. And the reason is I didn't expect the daily trend to change with no pullback. I'm not saying it can't. I just expected it to retrace after wiping this liquidity. I think there was actually something there on the 4-hour. Yeah, we had a bunch of trend line here, a bunch of liquidity here. But what I'm saying is the higher time frame usually trumps it. So I have been expecting this range wipe for quite some time. If I was going to be honest with you guys, I thought it was going to be done on Friday, Monday at the latest, but here we are still trying to wipe this range. So right now, this is my POI I'm looking at on EU. This could be a very good zone to sell from. And if that zone gets broken and we continue on bullish, whatever breaks that zone is going to, let's say this demand here decides to push through this. Well, this demand here becomes the flip zone. And now we might be able to look at this demand to continue on up. Because something you have to notice about Euro too is on the daily, we haven't really had a lot of retracement. What I mean is, we pushed down. We never really had a lot of retracement. Pushed down again, better retracement on this one. Here we retraced a bit, but then we had a big push again, little retracement, big push again. But there hasn't been a whole pile of retracement, so I wouldn't be surprised if Euro did come up, mitigate something higher, and whether it chose to continue on down or not from there, it could happen. And everything comes down to how strong these zones are. Like this is a very strong zone. This is a very strong zone. The chances of euro going through either of those zones without some retracement and some building of liquidity it's very unlikely. You can see how long euro sat there. That zone's not getting they're not punching through that. So this is my guesstimate as to why they sat here so long to collect enough orders. Like I said, I'm still bearish right now because nothing's showing me anything otherwise. But as of right now, that POI and the range wipe is what I'll be looking at. Let's actually, yeah, the POI I showed you guys, which is up here. This same scenario happens over and over though. Whether we're going up or we're going down, there's going to be a bunch of liquidity up here, or there's going to be a bunch of liquidity down here, and then they're going to wipe it, and then the move happens. And like, this isn't just euro, absolutely any pair. It takes them this many days to acquire the orders they need, because however many lot sizes it is they want, or however many it takes to punch through that weekly demand. But that's kind of what I'm looking at on euro. Like, we're not very far off from this extreme at this point. The other thing you got to look at is how is the zone left? Mitigated, 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 mitigated. Is there really a lot of resistance in any of these zones? No, there isn't. It's really not that hard for them to push through there to get up to this guy. But there's about 2 months ago where euro literally had the exact same scenario, and it did exactly this, and then it went like this. News event caused it to go down, but it'll do it whether it goes up or down. It'll create a range, it'll wipe the range, and then the real move comes. I know this the last 6-7 days have been a little hard to read because the only structure point we have is this one and this one. Even on the 15, like, this never closed, so we still don't have any new structure made. It's definitely been a bit tough, but I don't know if you guys had a chance to watch my range video, but the only thing you start noticing is all the extreme supplies are holding, and we keep running all the demands. Yeah, they're only substructure, but what you can make note of is that supply's in control and kept pushing down. And usually when these ranges get created, they usually wipe them in a day or two. The wipe's always quick. And the reason is everything's mitigated. There's nothing to stop it. Does that kind of make sense?
Yeah.
But as far as like what it's going to do, we never truly know. We can assume, but right now we're still bearish. And even if this turned bullish, I wouldn't be convinced that it's fully bullish. My charts are a little naked right now. I ended up losing all my charts yesterday while trying to load this on and restarting my computer. It was kind of a mess, but for the most part, I have my last four points. So 2 highs, 2 lows, either direction. Aside from that, I don't need anything on any time frame. Same with 15. 15, we have a high, we have a low, we have another high, and we have another low. This low became a new low when it ran this wick and we got a body close. So as of right now, GU is bearish on absolutely every time frame, but I'm kind of wondering if it'll be the same scenario as euro, where we take a bunch of this liquidity, if not all of it, a good chunk of it, before we continue down. But that's pretty much how I'm looking at it right now, guys. Weekly's bearish, daily's bearish, and until daily changes and becomes confirmed, I'm bearish. Did that kind of answer your question, guys?
Yeah, perfect, Rob. Thank you. Thank you so much.
You bet.
Bro, may I ask you another question, please?
Yeah, man. Shoot. What's up?
Kindly go to weekly time frame. I have the
GU?
similar question based on my first question.
Yeah.
Yeah. Okay. That's fine. Okay, just a minute. Bro, if this is my supply point, yeah. suppose think this is M15 chart for me. Then if this is my supply zone, so sometimes I can notice that if I draw some weeks are here the bigger. So if I draw full this body plus week for my
Yeah,
supply zone,
it's
sometimes
half of
if
your screen.
yeah sometimes I notice that there is a first reaction point here, but a lot of reaction is here, and which is the exact the right position for me, this body just an upper week or whole full zone.
I always go with so on the supply side of things, I prefer to go with the body and then the wick. On the demand side of things, it's the exact opposite. Let's see if we can find one. On the demand, I would pull the long wick and then just the body. With that being said, you can definitely react to the wick because it'll be a supply or demand on something different time frame. But the reason I use the body close and then the wick, where the body closed is actually your highest volume, right? So that's
Yeah.
kind of trying to dial in the precision of your supply and demand zone. And if you look at any swing traders, that's the swing supply and demand or order blocks. They don't ever use these wicks. They use the body and the wick, same way as I showed you guys in the course. That is a subjective thing. Nobody actually knows. The true supply zone is this.
Yeah,
My
but you may notice that if I draw from here just body, then my first reaction is here. Then I can easily identify my second flip demand zone here. But if
yeah,
I draw this weak, then this is my my reaction point. So my demand zone maybe will be there. Would be the this one.
yeah. So
That's my conclusion for
I
taking that.
understand exactly what you're asking. And again, we're going to go with the latest reaction point, which is the top one here. So that's this guy here. So scenario one is that we just come into this demand, we tap in, everything's all good, we leave. Scenario two is this first demand zone creates inducement for the zone below. You have to be ready to take a trade off this. So enter your trade in here, get your risk off as quick as possible. And if you break even on it, there's a good chance it might do this, then go up. There's always a possibility of the POI above just creating inducement for this POI. We never truly know. What I will say is, like I said, 3 out of 5 times, it's the latest reaction point and what took it out. But the other 2 out of 5, it will come down here. Now, this is, for me, this is true on Euro USD, GBP USD, GBP JPY, gold, not so much. It's a bit of a fussier pair. I haven't tested this theory on any other pair. I imagine it would be similar, but whatever pairs you're trading, you have to figure out that pair's characteristics. So with GU, one thing I've noticed with this pair is it likes wicks and it likes inside bars, and it seems to like the extremes a little more than Euro does. Euro's lazy and doesn't go to the extremes as often, whereas GU will come to the extreme a little more often than Euro. And that's just something you have to test with whatever pairs you're trading. But as far as a guideline and a starting point, I always look for the latest reaction point and what took it out. And if it's not clear, for example, if I find this reaction point on the 15 and it's not clear, I'll cycle through the 10-minute, 11-minute, 12-minute, 13-minute, and I'll cycle from everything from 10-minute till the 30-minute until I find the cleanest reaction point and the cleanest point of failure. So when I tell people, look at your 15-minute POI, that doesn't mean you shouldn't be looking at a 13 or a 20 or a 30. Sometimes by switching these time frames, you could really dial in and exactly where the reaction point is and exactly what took it out. I wouldn't go any lower than 10. Like even 10 is not my favorite, 12 and up. I definitely wouldn't be sitting there pulling 5-minute POIs or any of that. There's no need. But a 15 is a good starting point. The majority that'll solve the majority of your problems. But like I said, if you can't figure out where the reaction point is or what took it out, just cycle through from 10 to 30. You will likely find something that stands out, and you'll likely narrow down to 2 POIs. And this is why we trade the reaction, right? If you're just entering, let's say this was a 15-minute time frame. If you were just entering on the 15, well, it'd be an order down here and it'd be an order here. And you know that if it takes the first one out, you're just willing to take a loss on it. We enter on the 1 minute, so we're looking for it to come in here and chalk and flip. Now, if you're finding you're getting taken out too easy with chalks and flips, or you got to take a couple of losses before one goes, the other thing you can do is wait for your chalk and flip, and you can wait till this goes, and then try to re-enter on the second flip. The upside to that is, demands and control, demands are being respected, supplies are being broken. The downside to waiting for an extra confirmation is the market's not always generous enough to come back and tap you in. So it's one of those things. It's take the chance, or take the risk or lose the chance. Yesterday I went back through PA for GU and EU in the last 2 weeks. And I think in the last 9 days, there was only 1 day where I didn't have to take a single hit or break even before a trade went. For the most part, it was 1 or 2 break evens or a loss or two before a trade went. But if you're not taking anything below 5R and all your trades are between that 5 to 10, 5 to 15R, it's a very profitable system. The problem is, I think people get a little discouraged when the first chalk or two doesn't go. Like one of the member charts he posted today, he had really good analysis, and he took the chalk and it hit his stop loss. And I was looking at his chart and he's like, what could have I done different? And I was like, well, it chalked again. You could have got back in on the second chalk, but it's easy enough to say. But I know, like, some days it's hard taking losses and keep getting back in because you don't believe in your analysis. And that's why I tell people that analysis needs to come from 4 hour and 15 minute. Because if you just sit on the 1 minute all day, it'll wipe you. But you do have to take some hits. You do have to take some break evens. It's nothing's perfect. If you want your hit rate to go up, I would start looking at 1 hour paired with 5 minute entries paired with 4 hour and daily. What that'll do is cut your R's down, but it'll cut your losses down too. Because if you're starting to take 5 minute POIs, you're not going to be taking the 2 or 3 hits on the chalks or break evens. You'll likely get in, you'll likely just have that POI go. That is definitely something that can be used as a confidence booster. Because I know I've gotten quite a few DMs from people lately, and it's they get taken out 2 or 3 times, and the third or the fourth trade goes, and it can be hard to deal with. And the only thing I can say is if you can't handle it, try 5 minute entries, try 3 minute entries, something a little higher time frame. Yeah, it cuts your R's down, but it'll get your psychology up, and you'll feel a little better getting a few trades off. That's kind of the purpose of this indicator. Once we get it dialed in, I'm hoping it'll help with entries and just act as an extra confluence. No, it's not going to be the 100% solution, but it'll definitely help people here and there. And that's kind of the goal with it. So hopefully that happens. I think I went a little off topic there, but did I answer your question? Hello? No. Does anyone else have any questions? Hope I didn't put you guys to sleep there. I really went off.
My chart.
You want to share a chart? Hold on. Is that what you said? Is that Brian?
Yeah, sorry, man. Yeah, this Brian. Yeah.
hold
I share my
on.
chart?
Yeah, let me stop sharing mine, and you should be able to share yours now.
See my chart now?
Yeah, yeah.
Oh, perfect.
I
So
think I'm gonna have an aneurysm looking at this thing.
yeah, it's a little busy. So I'm gonna switch to one of these views. We'll only look at one.
That is a lot.
But that kind of helped me. Two things that helped me, kind of like what you were saying about the entries. What I start realizing also is how we look also at, like, for instance, ranges. The ranges definitely helps in knowing that, all right, this was where, like, for instance, we had our last 4 hour high. This is where the last 4 hour low. And know that all this is substructure, but what I'm looking for is the supply and demand interactions in between. So, like, for instance, here was supply that broke through this last pass of demand. Price comes down, price comes up, touches into another supply zone, price comes a little bit farther down. And now we've just wicked below the last lower low. But now we can see that, for instance, price is somewhat holding because it wicked through, it didn't close through with a body. So maybe
Yeah.
price is going to go come all the way back up from a 4 hour perspective. So
This
that
is
was-
actually the reason I was looking at GU buys today was because this wick was larger than the body. So that to me was like a good sign of rejection too.
Yeah. So that's what I've been using as my narrative. So when I came down and started the day, I knew that we were kind of heading downwards, and knowing that our last real range had been this high coming down to this low, but it was really all contained within this high here to this low. So we have a range, and then we had a range inside of a range, and I was watching this range. And so I expected that price would eventually come all the way down to break through this range. So I was just playing the interactions in the substructure that was happening in between. So I was focused on this range right here, knowing that, okay, we're in between these two right here. So as price came through today, I was looking at supply and demand interactions. It looked like demand was slightly in control as the morning started, as it breaks through here, it broke through here. And then what I watched for is I wanted to see demand get broken here, which it did. So then I looked for it to come back to somewhere around here. And I started to look right here for it to, come down and go further down. And so I played sales until it got down and it broke past our demand. I mean, our last lower low, knowing that, okay, now we're getting to the point where it's actually going to move, and then look for it to buys coming back up. So let me go down.
Did you catch the second buy on GU there, Brian?
Yes.
I was looking at it and I was just like, you know what? I'm just going to take what I got, going to call it a day. I was actually looking at the EU buy too, and I seen it. I talked about it, and I'm like, oh, it's so high in the leg. I don't want to do it. And I was looking at it, I was like, but it's going to wipe this range. But I really thought there was going to be a little bit of retracement before it went up, but she just rocketed it.
Shoot, EU threw me for a loop today. But I did what you said also, what you were just telling everybody about looking at different, there are time frames, you'll figure out your base time frames, but sometimes price action isn't clear. And I began to realize that sometimes on the 1 minute, it gets to be really busy. So what I'll do is I'll switch to entry time frames like the 2 minute or the 3 minute, just to see if I get a clear picture of what's going on. And so, for instance, like what you'll see, I think I based this on the 2 minute, if I can find it. Yeah, this is what I based it on. Here was where I was looking for. It tapped into my spot that I was looking for. Then here is where I said, okay, I wanted to pass this last demand zone, which it broke. This was the reaction leg that led to the break of this last demand. So here's where I have my chalk, and then that's my flip.
And you
so
had the inducement above it. It was a perfect place to get in.
Right. And if I had been looking at 1 minute, I wouldn't have seen this. It wouldn't have been as clear for me. But I began to realize that I can get not to get so stuck on just looking at everything on the 1 minute. Because if you look at the 1 minute, it looks kind of clear, but not as much.
The thing I found with the 1 minute is it almost hypnotizes you when you sit on a 2-on, and it's either good to turn around, not look at your screen for 5 minutes, or like you said, just start looking at the 2, 3, 4, 5 minutes.
Yeah, because you'll see it clear, and I'll show you on EU how it helped me today by doing that. And so here was my entry, and then what I was targeting was M15. Let's see, the last, I think, end of structure. Let me see where it was.
That entry of yours, that almost looks like a 30-second chalk too, maybe even a 15-second.
Yeah, no, I I was only looking at I look at now, I have like one window to look at 30-second, 1 minute, 2 minute, and 3 minute. And
Okay,
that
yeah.
just that helps me to see, all right, where do I see the clearest version of what I'm looking for? And then that's what I base my entry on. But that it did wonders for me today because I caught this 1 to 10. I was targeting this last kind of low where I was targeting this structure. And then it came down here and I saw this chalk from a 15-minute perspective. So
Yeah.
this was the supply. It came down here. Demand had to break. So it tapped back in. I think I based it on a 2-minute entry here. Yeah.
Okay, okay. Yeah, it's the same trade I took, little different reason, but the exact same area you got in.
Yeah. I saw it. It came into here. And then when it tapped twice here and then tapped a third time, I saw that it wasn't been able to pass this high. So I went ahead and closed out. And then when I saw it tap in here, I looked at the reaction that happened, even though this had already used this zone. You know, sometimes it can tap at the zone 3 times, sometimes 1 time and goes, but it gave me, I do market entries simply because, you know, you can take hits on limits sometimes.
I
And
was actually so I pulled this demand zone on a higher time frame, and then this wick tapped into it, and I was waiting for it to come back and test this area because on the 30-second, that's what took this out and completed the chalk.
Mhm.
But it never came back. So that was kind of the second GU trade I was looking at, but it never happened for me.
Yeah, GU the last couple of days they've kind of just been taking off without and not coming back at all.
No, GU's good for that. It's a heartbreaker.
And so I based upon my sales. This one I ended up having as a break even. It didn't go past my point that I was looking for, but then it came back, and this is where also using that multiple time frames helped. I was looking for sales based upon when I looked on M15. I was basing it upon here was a whole range that I was kind of looking for, knowing that we came from a lower low, but knowing really our range now goes from all the way here to this lower high to this lower low. But I was looking at more immediate supply and demand. So here's a supply zone. Here was a supply zone. I expected to get some type of reaction, even a sale here. So I ended up taking 2 sales. The
See,
first
like,
one,
for me, I would have wanted to just go back to the 15 for a sec.
uh-huh.
For me, like I would have needed to see this wick violated to start selling. Even though we are bearish, like I would have wanted to see that wick get violated because that's kind of my last drive up that put in the high, and I want to see that get disrespected, and then I'd start selling unless I had 2 supplies or demands in here on the 1 minute fail. Then I might try it. It's a little riskier, but they work, I don't know, like 40% of the time.
That ended up playing in my favor because of what I ended up happening was I ended up seeing a chalk here when it tapped into what I was looking for in M15.
Yeah.
It came into that from a 1 minute perspective. It gave me a trade to hit like a 1 to 4. I closed out. Then I had switched to the 2 minute. And what I was waiting to see was I wanted to see, did it break this past last low? It did, but I counted this to be the reaction point coming back to the extreme.
So this one went and the second one broke you even there?
Oh, this one went break even, but both of these went.
Oh, nice. This is kind of actually a good setup if you think of this in terms of inducement. The wick, that's actually not a bad setup at all. I honestly wasn't even looking at the charts too much after GU didn't come back on that second trade I wanted. I don't know. I think overall, what did I have? I had 2 limits not grab, 1 break even. Then I had the one that went, and then it never came back to the area that I wanted to buy from again. But yeah, like you said, this pair just kind of goes.
Yeah, it will just take off.
Yeah, it's not as friendly as EU that way. EU's just like, here's your other entry. Here's one more in case you missed that one.
Yeah, EU was showing out today with some tricks early this morning in the London session. Let's see if I can get the London to load.
Yeah, Amy actually she shorted that really quick on the two demand breaks.
It came in, it tapped in here, and then I ended up taking this short, and then I can't remember exactly why because it wicked down here. I thought it disrespected this demand, so I put in a apply zone here, and it tapped into this. I took this and shorted that as well. And then where was it? This is all in 2 minutes. Let's see. Trying to figure out what happened in 1 minute. Oh yeah, and this is where I ended up having a similar thing here that I think somebody in the group check. I was looking for it to enter in here, and it came back into the zone. I used candlestick confirmation, so I'm looking for like kind of like a V-shaped recovery, and I thought about entering in right here for a buy, but something about the candlestick didn't agree with me. It comes down a little bit lower, and then it chalked, like you said, again, and then I end up taking this one because what I look for from my market entries is I look always for some type of V shape. What I want is a strong move in. I want there to be like a doji or small reaction where it holds. And then I want a strong movement up. And that's what I look for from a candlestick confirmation and not using limits. Once I see this formation, and it can
On
be any
candle
kind of,
close, you take it.
I just take it.
I got you. Okay.
So that's what I always look for. And it's always the same on pretty much every entry. So here was probably a 32nd, but here it swept the highs, swept the lows, broke here. I was looking for it to tap in. It taps in, and then you get strong movement up, indecision, strong movement in my direction, and then I take the trade.
Yeah, like see for me to market execute, I would probably go to 15-second in here and look for a chalk. I haven't been doing that a whole lot lately. I found the 15-second. I don't know. It works really good when you get it to go, but sometimes you got to take like 3 or 4 hits because it's the 15-second. And I don't like taking 3 or 4 hits. So you had a pretty good trading day overall.
It was a really good day.
Yeah.
A really, really good day. But definitely, like you said, just cycling through those time frames, like 2, 3, 1, 2, 3, and 30 seconds for me helped me to wait to see where do I see the clearest picture. Because I forgot to show you on EU what threw me off earlier. Hold on a second. Let me show y'all just real quick. Like I said, I look for a certain type of kind of entry in. This wasn't exactly what I was looking for where it came into it. And then this kind of got a little bit more kind of just to see a cluster of candles, and I didn't really exactly see the mood I was looking for on the 1 minute. But when I switched back to the 2 minute, I could see very clearly that the model I was looking for. Strong candlestick going into the zone. I see indecision, and I see a strong movement against and going in my direction. And I
it failed to violate the high.
Mm-hmm.
Yeah.
So yeah, definitely taking your advice on just kind of cycling through those time frames will help to see clarity in what you're looking for.
It does. So I went back and I was testing the just the last 2 weeks of EU and GU, and I was looking. I was just like, I even actually tested some of London, even though I don't trade it. And what I ended up doing was figuring out that even though there wasn't 15 chalks to back every single move. Here, hold on. Let's see. I think EU. Even though there wasn't 15 chalks every day to back our moves, what I found was if you looked at the 12 and 13, where was it? Was it maybe the 13? There was a couple of days where we didn't have clean. So this one right here, we didn't have a clean 15 chalk. On the 15, it just looked like we ran sell the buy wicks. But if you went down to the 13 minutes, we had a clean chalk. It came back in, re-chalked, and it actually gave you an entry on the second flip. But if you didn't cycle through and you were just sitting on that 15-minute, you missed this whole move. And I was just kind of testing. Even London, if you're willing to go down to that 12, 13, 14-minute, even right here, again, you get some sort of a chalk. Whereas on the 15-minute, it's not very clean. So yeah, definitely cycle through your time frames, guys. So let's just to show you an example. I think it might have been this zone. If we just circle this zone and let's go to 15-minute. So actually, it's still clean on the 15. You still had a chalk. It's not as clean, but on the 13-minute, this was a very much cleaner looking, and it's still a higher time frame chalk. But yeah, I would definitely advise people to go play with these different time frames.
I often cycle through. I'll cycle to 10 to 15, especially if I think there's a chalk that I can't see on the 15. I'll go to 10 and see if I see it more clearly.
Oh,
And
man,
that's
if people knew the secret of the 16-minute time frame. No, just kidding.
let me find out the 16 has all the hidden gems.
Oh yeah, for sure, man. If you don't know about the 17-minute and the 16-minute, you're missing out. Does anybody else have any questions? Or does anybody want to share a chart? Oh, we have
Yeah,
some.
bro.
Yeah, I just
Um,
entered something on the chat. How do you
Yeah.
guys enter that quick?
Yeah, I use magic keys. I have so my function 1 is instant buy. My function 2 is instant sell. So on Euro, I got them set to 2 pip stops, which is a little bit large if I'm doing seconds executions. If I want a smaller stop, I would just pull the red line down just above the candle wick.
Yeah.
And yeah, that's pretty much the best way to market execute. Lately I've been really about my limits, and like I got really trigger happy on the 15-second, and I was doing really good for a while, and then after a while I started taking too many hits. So lately I've just been sticking to the 30-second and the 1 minute, and it seems to be working a little bit better.
Yo, Rob, can you show those three indicators that you got up there left?
What do you mean?
About, you see that? Yeah, out there.
Oh yeah. So hold on. How do we?
I would really appreciate it, bro.
Yeah. So this one's Brian's market structure, which I just used quickly to double check my own. This one's in development and testing phases. You guys will have it once we got it fine tuned. And this one here is just the inside bar. IBSV2 is the best one I found, and that's just your white candle showing you a range. But aside from that,
If you can show us like real quick, like the colors of the candles. I asked you on IG, but I don't want to bother you about that a lot, you know.
you want the color code?
Yeah, just click on it so I can like yeah. Oh, okay. It doesn't do it like that.
So
Yeah.
that's the one there.
Perfect.
You got that?
Yeah, I got everything, of course, in a second.
Okay, and the second one is.
Appreciate you, bro.
Oh yeah, no worries. I found these colors were really gentle on the eyes.
Yeah. That's what I'm telling you, because my eyes I've been in front of the PC for a long ass time, you know.
Yeah, well, I would even make your background a little bit gray instead of bright white. I found it helps your eyes. It's not as hard on the eyes. I'm not a big fan of the black screen, but I found the gray screen works nice for me.
Thank you, buddy.
Yeah, you bet. You bet, man. And supply and demand, I don't think is anything special. I think it's gray and pink with the opacity turned down.
Bro, I have a little bit confusion, though you answered my all questions before. Can I share my screen for a little bit?
Yeah. I'll stop sharing. You go ahead and share yours here. Go ahead, man.
Okay. For sure, this is my last question about this.
Oh, no worries, man. Ask away. That's why we do these.
Okay. Sometimes this is my supply for me, yeah. Then here I can found only one reaction, but there is no inside candle which takes the reaction. So in this case, which is my demand, or which would be the exact right demand? Because sometimes we can see here another candle, then market go up. So this is the reaction point taken out.
Yeah,
we can consider
this is one of those spots where you'd likely take a hit on the first, and the second trade goes for you. This would absolutely be a zone I would look to take that off of. This, when I see a candle this big with a wick, I only take the bottom half. I never take candles that big. The downside to that is I get missed a lot, but yeah, I would put an order on both.
Oh,
How much percent you risk per trade?
Funded account, usually 0.25, maybe 0.5 if I'm up on the week
Oh.
quite a bit. My own account,
fund.
1 to
You funded
2%.
200?
Yeah.
Oh, okay. Tell me just one more thing when it comes to psychology and those higher numbers. Is it smart to close early or just like let it hit 9 to 5 or 9 to 3? Because you know, like 2%
If you-
a day in a
you
month.
trade-
You know,
Like
make
for
a
me
pile.
personally, within my trade plan, if it will not run 5R, I don't even want to be in it. Like if I mark out a trade and it shows 4R, I won't even take the trade. That's just the way I am. There's nothing wrong with taking a 4R trade. I just don't. But I leave
And
my
what's your-
trades. I leave my trades to run the target. But there's a flip side to that. I took two or three break evens this week, and I left 9R on the table and ended up breaking even on them instead of taking the 9R off the table that I had. So there's
Yeah.
kind of that. There's that fine line, which is why I didn't hold my trade today to run that high. I was like, I'm just gonna take money out of the market because some days I find myself getting too greedy, looking for that 8 or 10 or 12R when you already have 5R on the table, and it's good to sometimes just hard TP. Lately I used to have no problems holding to target, and then I got to the point where I only held to target and I wouldn't pay myself. So I'd have trades go like 9, 10, 11R, and then they'd come back and hit me out at break even.
Yeah,
So
I had
what I
that problem also.
Yeah, what I found is
Greediness.
if the trade's longer than 8R, take partials somewhere. You should have a guaranteed method for getting paid. And like
May I ask you how much percent you make a month? Like in terms, like
it's different every month, man. I don't even focus on how much percentage. I just focus on taking the absolute best setups I can, and in the long run, it all adds up. I don't focus on a percentage. I don't focus on how many trades I take in a day. None of that. There's weeks where I take 3 trades. There's days where I'll take 7 trades. I pretty much trade what I see, and if it falls within the plan, I take it. The worst thing you can do is be like, I need to make my 20% a month. I need to make my 15% a month. Because you get to the end of the month and you're just like, oh man, I still got 12% to make. And then you start taking unnecessary shit. Just like get rid of any kind of number, any kind of expectations, and just take the good setups, and you will be way further ahead. I have a guy that keeps messaging me and he's like, hey man, is it possible to make 50% every month? I'm like, possible, yes. Realistic, probably not. Can you be profitable every month? For sure. Can you consistently have large numbers every month? No, man. Life happens, psychology happens, market happens, news happens. Like sometimes I'll go through a really bad week and then the next 3 weeks are good. And then when I'm having a bad week, I'll look at my buddy and he's having a great week. Then I'm having a great week and he's having a bad week. And I'll be like, oh, how did he miss that? Or even just like looking at someone else's charts. It all comes down to your psychology, right? But to have an expectation or a number you put on yourself, don't do it. You know, if you're gonna sit there and be like, I need 25R a week every week, when you get to Thursday or Friday and you're not there, you're gonna start doing stupid, unnecessary stuff you don't need to do. Whereas if you're just like, I'll take the best setups that are within my trade plan, and at the end of the month, you'll be like, oh, cool, that was like a 70R month, right on. Or cool, that was a 20R month, not a huge month, but I ended it in profit. And not having a number or an expectation will take pressure off you, and it'll help you with your psychology.
okay, thank you. If you have any more advices when it comes to like, because you know, for me, let me be honest, like I passed like couple of like I passed 3 times 100K, right? Like through
Yeah.
1-2 days. And bro, the problem with me, like I have greediness, because like in my country, people work for like $10 a day, and I used to be one of those people. And when I see those numbers, I go crazy. For me, it's not a problem to pass the phase one. I get greedy at phase two. So I'm about to read like some books about trading, so I'm gonna see if I can fix that because that's all about me. Like I get like way too greedy on the phase two, even if it's easier. For example, my forex funds. I just
Trade
blew it
less.
up.
Trade
Yeah,
less.
I just blew it up. I don't know how. Like I just and it's gone. And I was
I had
like,
a
damn.
guy that messaged me yesterday and he blew his second phase in 2 days, I think. And he was just like, "Can you recommend anything?" And I was like, "Yeah, like how did you do that? Like, why did you second phase? Why were you risking over 1/4%? Why were you losing over 1% a day?" Like statistically speaking, if you're only risking 1/4%, those losses don't hurt you as bad as a 0.5%. Statistically speaking, not even compounded, but that's 40 trades you have to lose. Obviously, a little less with commissions and shit. But the chances of you losing 40 trades are probably, it shouldn't happen. Like,
You're telling me it's more worth it to put like less, for example, not to risk.
yeah,
Because I
risk
zero, I
less
think
and trade the extremes.
0.7. I risk 0.7, but you think I'm supposed to go lower if I'm like, because like I think
I
it's
trade
not
90% of my trades are 0.25, 0.3, 0.35. If I'm risking a 0.5%, that's because I'm up quite nicely on the week, and I don't mind risking 0.5% a trade because I know I'll end the week in profit no matter what. But as far as me ending risking a 0.5% on a Monday or Tuesday, not a chance.
okay, I got it.
And it's not, yeah, it's great when you win, but when you start taking like a 0.7%, that's a big hit to the psychology when you lose three of those. That's 2.1% plus commissions plus slippage. So you're probably close to 2.4, 2.5. Well, Michael, that's half of your daily loss limit right there. And you shouldn't be getting near that on a funded account.
Yeah, I'm about to take it slowly.
Honestly, man, smaller trades, smaller lot sizes will get you further. It'll build your confidence. When that confidence is up and you have a buffer built, then yeah, by all means, bump it up. Do like 0.25 on Monday, 0.35 on Tuesday, and by Thursday, Friday, maybe throw a couple of 0.5% trades on there. But to throw 0.7 trades on all the time, like I said, losing those will definitely hurt the psychology fast because your account just depreciates fast. Whereas the 1/4%, you gotta royally screw up before blowing your account, right? You're not gonna lose 40 trades in a row. At least you shouldn't.
Yeah.
But yeah, another guy I coached, he sent me a picture of a gold trade and he had made like 7K on a gold trade or something on his FTMO account, but he's only got a $25,000 account. And then I looked at it, I was like, holy crap, this guy's risking like 3% a trade. That's insane. It's like people over risk to think they're going to get rich overnight. And you could do well in this game, but getting greedy and taking too big of lot sizes, it's not the solution. Like before I learned how to properly manage risk, I make 200% one day and lose 80% the next day, and then you fall apart. And that's not a way you want to trade. You want to manage your risk. You want to keep those numbers small. Oh, hey, I lost 2.5% in the last 4 or 5 days, but then I had a good day and made 4 or 5%. Like those are more realistic numbers. Those are numbers that aren't going to screw with your head as hard. That I think as you spend more time in the game, you'll improve your psychology, you'll improve your confidence, and you'll get to the point where you'll take those larger sizes. And like I said, I do bump my percentages up all the time, but that depends on how the week's going. If it's Wednesday and I've taken a bunch of break evens and losses, I'm not gonna double my risk on Thursday or Friday. But if it's Wednesday and I'm up 14, 15 R, yeah, maybe I'll throw a couple of 0.5% trades on. And if they don't work out, well, whatever. I'll quit trading for the week and end my week at like 8 or 9R and still be in profit. There has to be that weekly outlook, not so much how much did I make today, but how much can I make in the week. And if I'm up on the week and it's Thursday and Friday, no matter what, I'm going to make sure that even if I lose, I'm not going to lose all my profits and give it back to the market. So like today, I was going to hold my GU to run that high, which it did. But had I held it, I would have broke even again. And that's literally what I did yesterday. I took 2 losses and 2 break evens, but they all went to target. But my the one trade, I think I could have closed at 5R. Another one was like at 4R. And I'm like, to lose 9R because of greed, it's silly. So there has to be that fine line. You'll do a lot better if you took 4R here, 5R there, 6R there, than going for these big trades that are 0.7 or 1%, and you're shooting for that 30R every time. Well, the higher the R, the lower your hit rate. The higher your percentage you're risking, the faster you're going to fall apart when you lose. So this is the stuff you got to take into account, and just remember that less is more.
Yeah. Thank you so much. I
You
appreciate
bet,
it.
man. We'll end this.
Like, what
here,
about books?
guys.
What's the
Hey?
what's the like remember, like, I signed in the Discord. Yeah, I have some books for trading. I have Discipline Trader and like Trading in the Zone, but I didn't read them. Like, which book do you recommend?
So
Like, which book had most impact on you?
Outwitting the Devil by Napoleon Hill. That's a really
It had
good
most
book.
impact on you?
Yeah, that's probably the best psychology book I've ever read. Outwitting the Devil. Another good one's Trading Beyond the Matrix. You have Trading in the Zone. I really like Becoming Supernatural. That one's a little more into the meditation and the spiritual side of things, but it just he's got a lot of cool brain scans and stuff, and talks about how your brain actually works. That's why I like that one. And for a while there, it was pretty hard into meditating. Lately, I've been too busy to even get to do it. But I find that can be a big help. Another one that I read that you may or may not like is The Kabbalion. The first book you called isn't on the list. No, it's not. You know what I'll do, guys? I'm going to list these books in the psychology section just so everybody knows what they are. There's about 5 or 6 of them that I recommend personally. And what does it called? So the first one is Outwitting the Devil. I'll put all this in the psychology chat.
Yeah, I appreciate it.
Yeah, you
I
bet.
think I already found it online for free, like, it's crazy.
Yeah, exactly. Yeah, they're there if you look. Yeah, give me a few minutes, guys. I'll get this up online, and I'm gonna go in the psychology section right now, and I'll add all the books I recommend. All right. But yeah, I will.
Yeah, great, Rob. Thank you.
You
for
bet,
your,
guys. Thanks
time.
for coming out, and I'll see some of you on Sunday and some of you next Wednesday.
Appreciate you guys. Have a nice day.
All right, bye, guys.
Have a good one.